Hi, everyone. August, I hope you are enjoying your summer. Uh, Ted will not be with us today. He got a last-minute emergency issues with power and internet. So we hope to see him next time. And yeah, so today it's Rafael and I. So as you all remember, we were quite bullish last show, and we saw this bounce, especially in tech-related names. But at the same time, of course, ES is on the path to our 8,000 target now. Looks like everyone on Wall Street also has 8,000 targets. So I'm sure we have a lot to talk about. I don't know if something changed in Rafael's views or not, and I'm really curious to learn. So, Rafael, what do you see in the markets, and are you still as bullish as 2 weeks ago?
Hi, bye. So, yeah, I want to give a caveat for what I was thinking 2 weeks ago. So, we were expecting a bounce for sure. We talked about that. Markets were oversold, especially all the drivers of the sell-off were oversold. They were at their long-term low of the range. Most of them were printing buys. So, we were advising people to expect a good bounce. But I was still expecting some more volatility. So let's see if I still think that. And yeah, anyway. So first, let's go to NQ because that was the concern for everyone. Tech was turning off. So share screen. Pop, 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 pop. Give me a sec. Just need to make sure. Yeah, it should be this one. Sorry, I'm having issue to share. Okay, now you should be seeing it. Okay, let's go first to here. So what we had, where was tech at the time of the show the last time? We are basically here. So I think it was that day. Should have been the 28th of July, I guess. And yeah, we are seeing all case of assault, etc. And what happened was NQ on the next day literally printed a buy as we were retesting macro down level number one that is provided by Vi. So obviously took a shot there to ride the short covering move up I was expecting. And so far, it's been a great trade. My target for this bounce were defined by two things. So I posted one of the reason where I would consider taking some off. It was the area on VIX between 14.4 and 15.3. This area is defined by trend and trade. So if you remember the show from last time, I explained for another time the idea of how volatility works for any asset and also for VIX. And my expectation from 2 weeks ago, and it's still my expectation now, was the fact that VIX would reach trade or trend here. So that's why I gave you this area, and we are clearly there. The mean was what, yesterday or today? Low 14.39. Yes, same low. So I was talking about 14.4, pretty accurate. And my expectation remains the same regarding VIX. I'm still expecting this thing to bounce, but I'm going to talk about that after. So that was my first reason to take some off, actually a big chunk off on the long tech. Another reason to take some off and to be smart about taking some profit after buying the nice bounce here is the fact that NQ is actually approaching its macro zone, its main macro zone, so also called flatten zone. Another reason why you should consider to take some off is we have a yearly target also for NQ, and we have also the quarterly pivot just above here. So we have what you call a confluence. So I materialize it in my trading dashboard with what I call a cluster. So NQ reached one of these clusters. So that's a good place to start to unload. So I basically had VIX reaching the target I was aiming for, and also NQ was approaching. So I started to unload big time this week. Now, also another reason is the fact that I'm starting to get some sales pretty much everywhere. So I have some on Yes, I have some on NQ, one today, QQQ, SPY, SPX. So I'm getting sales on those. That's another clue. And yeah, that's why I decided to take some up. So now the big question is now what? So what happens? So I'm gonna give you my take, taking two different paths. So again, my expectation, considering what VIX does, the volatility of VIX, sorry, does when this kind of setup happens, I'm still convinced that a VIX spike is around the corner. So the one we had was pretty good, but it's nothing compared to what we usually get. And the thing is, where trade of volatility of VIX is right now, so in the low 30s, is nowhere near any of the minimum it has gone to in the past before we had a top in VIX. So I actually mapped it. You can do it yourself with my script. You just put it in, you double click here on TradingView. You mark this area with a line. I mean, it's pretty simple. Here, you just put here and you look at history as VIX started to switch its volatility profile at this area. The answer is pretty simple, it's no. The only time I saw it reach this level, it was there for 2 days, and then suddenly volatility of VIX just went down, and VIX went to, I think, 27 in the span of 2 days. So that's the only exception I found, but that's only one. So my expectation for VIX remains the same. I think we're gonna get another big spike. I'm pretty surprised actually to see that it's nobody now is talking about that. I mean, even some guys I follow for good macro takes or good signal takes, for them it's over. I mean, I have some people I follow because they are good, actually added yesterday to their longs. So I was quite shocked, especially considering that we reached some good confidence area to take some profit. And also because I have my take on the VIX, and that I would be quite surprised that it's the end. So sure, you have here, you have volatility of VIX starting to make higher high and higher lows. But again, I'm overlooking that for a simple reason. Trade of volatility of VIX has not reached the mean where it has the habitus to go to. So that's take number one. Take number two, um, it's regarding the tickers that are performing. So give it a sec, it refresh every 5 minutes. Let's go here. It's gonna load faster normally. Yeah, but I want to see the risk on, risk off. Sorry about that. So before you see it, so I'm tracking the ETFs that perform and the one that underperform, and based on the one that underperform, you can deduce where the money is going. So basically the money flow. And let me press refresh. Okay, it's here. and it gives you an idea of okay, is this market clearly a risk on, clearly a risk off, or just mixed. So in the show, I think it was a month ago, it was clearly risk off. 2 weeks ago, it was risk off, but because we had the sell-off, we were expecting a bounce. And during the past 2 weeks, the signal clearly transitioned. All the performers here flashed a risk on regime. And this week, it started to change again. So I started to see on the 3 months became mixed, on the 1 week also switched to mixed. So now basically, I think it's because we reached some significant targets, the ones I mentioned. People are like, okay, maybe I should take some of the money off what has clearly worked for this bounce and put it in defensive. So that's another clue for me to say, okay, it seems that not everybody, contrary to what they are saying on Twitter, is sure about this market going to risk on as easily as they say it is. So that's another clue to tell me, okay, maybe this volatility is not over. Number three is the fact that NQ is actually lagging. So it looks impressive considering the kind of bounce NQ did in the past 2 weeks. But the fact remains that NQ is actually still below its macro pivot, its flattened line, while ES is already well above it. So again, that's another clue telling me people are not rushing back to tech. I mean, it's still underperforming ES, which has more defensive stocks in it. So that's another clue I'm looking at, thinking, okay, if we were clearly back on the bull wagon, NQ should be much higher. So my take is still to expect. I was expecting a week to week and a half, 2 weeks before we see the next sell-off. We are 2 weeks later, and the sell-off is not there, but it's flashing. So my expectation would be in the next couple of days to see some vol pickup. So let's see in the next 3 market days what happens, but that's what I'm seeing. Now on the other side, because I want to be fair too to the people who are calling for this sell-off to be over. On the other side, if you look at the volatility profile of ES and NQ, for instance, this is clearly the kind of profile you want to see. So NQ, after its volatility rose for so 3 months, 3 months. Finally starting to make lower lows, lower highs. That's very good. We have also the low of the range on MFR starting to rise. That's very good. You are starting to see the same kind of pattern in ES. So volatility doing exactly that. You have the low of the range here also climbing back up. So what this thing is telling me, if I have to mix it with what I just said about expecting the volatility rising, the fact that risk on is still not on, would be that maybe the sell-off we see when we get the next VIX volatility spike could be that the next sell-off may not be as violent as I was expecting 2 weeks ago. If you remember, I was expecting maybe a 6% down move to come after new lows, actually, after the pop that we just had for the past 2 weeks. And when seeing that volatility is clearly exhibiting a very nice pattern, ranges are starting to get back up. Maybe the sell-off coming will not be that bad and could actually offer us a good buying opportunity. to have how to say, more confidence in holding assets. Of course, what I would like to see, and also addressed that 2 weeks ago, is I want to see trade actually reach some kind of lower value, and then see the kind of pattern here in volatility. So higher highs, higher lows, but I want to see trade of volatility actually get much lower. Another thing that I'm monitoring also is macro, and that's another clue for the other side is so I have a macro regime quadrant, and we've been on the inflation trade for about what about 10 months, yeah, 10 months. And for the first time, my forward-looking forward-looking tool is actually flashing expansion. So the confidence is quite low compared to the inflation right now. My inflation confidence here is 73%. But for the next, what's coming next, expansion is actually showing up. 22% confidence is pretty low because we don't have yet enough data. But that's another clue telling me, okay, maybe the next sell-off is not too violent. Maybe it's a good dip, and so I'm gonna be on the lookout for that. Now let's go back to assets. So let's go to gold. So we had a question 2 weeks ago about gold bottoming. I said I have no idea. Frankly, it was not an easy call to make. Sure, you starting to have at the time a gold actually climbing back up above trade, and vola was starting to get below. But it had happened before, and it had happened in the same vicinity of prices. So I told to the user, I don't know. And we had a good bounce actually at pretty significant level, because on JC we actually have in this area a big cluster of level. So actually two macro zones here that acted as support, and gold bounced back to first the macro zone, and also one of the targets provided by Vi. It's macro level, macro up 2. I'm not sure if it's the way it's called on the Excel file is sharing. And as we reached this conference, JC is actually printing some sell. So I want to come back to my view regarding gold. So I said that 2 weeks ago. Considering how long gold has been, volatility of gold has been in this posture, so doing higher highs, higher low, rising, it's gonna take some time for it to fix itself. So what I would be looking for, and I think I said I was expecting that for end of September, maybe beginning of October, if I'm not mistaken, is I want to see the same kind of pattern I explained for the VIX. I want to see trade actually cross trend. This is where I'm going to look to get back into gold. So ideally at the bottom of the range, but that's the kind of pattern I will be looking for. So again, for me, it's not the time yet. If you bought it there and you're starting to take profit and it doesn't do another low, perfect, you nailed it. For me, I want to be sure, so I'm waiting for trade to cross trend, and then I'm going to look to buy at the bottom of the range. If we get this kind of pattern, I'm pretty sure we're going to start to get the next bull run on gold. So that's my take on this one. Quickly on Bitcoin. So 2 weeks ago, I said, okay, volatility is exhibiting the pattern you see in a bullish asset. It's actually bullish, but I also said I think it's a trap. So for now, I don't have confirmation for it. I mean, it looks great, but yeah, because I'm expecting another vol spike. I'm not touching it. I want to see where it is after we get the vol spike. And to conclude, I want to show you the yields and sorry. Let's go first to the long term. 30 year, no change. No change, still bullish. 10 year, still bullish. 2 year, changing, retesting trend. Volatility is a bit rising, but the last time it did that, just used it to confirm the trend. So for now, I'm not taking any new signal from it. For me, I'm expecting the 2 year to keep grinding higher. And yeah, I mean, no change regarding yields. I don't think it matters much right now, especially if you look at the correlation because they are quite low. If you look at the correlation, they are here. They are dispersed. So sure, they are tightening, they are rising, but they are really far away from something that would flash something to worry about. So I think Vi is going to talk about the correlation anyway. But yeah, that's my take. So again, I'm expecting some volatility coming. I think it's going to be a deep buy that we can actually buy with more confidence. And gold, not yet. I'll be waiting. Bitcoin, I think it's a fake move. Can be proven wrong, but I think it's a fake move. And correlation, they are not really interesting for now. That's my take.
Thank you. Very good and interesting take as always. What I think is that bonds are still no touch. So absolutely, I believe that my piece will be short today, but the main point will be that don't touch bonds. So I will share my screen. I'm sending a request. Yeah. Okay. So now you should be able to see my screens. Okay, what we have here, what we have here is, of course, the comparisons relative performance, and so far in August we see a dip. Sorry, not a dip, but a change in rotations. We are back. Capital is flowing. Software is bouncing back. Semiconductors are also bouncing back. We can see that in August, IGV is doing quite well. Of course, SOX. If we are looking since the beginning of July, we will see, of course, also a very telling situation. We will see that software is actually something everyone needs to follow. Well, of course, everything is important. So we were watching semiconductors, SOX, and all the sectors for a long time. But the theme that was starting since the beginning of the year, basically short software, looks like it's over, at least for now. So software is bouncing, and of course it's good for overall stocks as well, because SOX is also doing not terrible, especially in the last few weeks. Of course, it had a brutal July, but yes, software is bouncing. I don't know. Maybe everyone is squeezing Michael Burry. We will see. Michael Burry is shorting software and Palantir also. So we will see what's going on. Yeah, but watch the capital flows, and worst performing sectors since the beginning of July, of course, are still semiconductors. But if we go to the beginning of August, you will see that the worst sectors are things like retail. Real estate is flat. So yeah, I recommend you create something like that on TradingView and just see. Okay, let's go check for yourself. Okay, let's go to the usual suspects. So instead of SpaceX, we will go to something that actually has data. But the average sector correlations are still very low. They are very low, and we have 24 in 21 days, as Rafael was already saying. But if we are looking at a chart, I'm a visual person. I like to watch how it changed. So we see this correlation rising. Basically, on 20th of July, we had no correlation between S&P sectors, and now we have some 0.24 is still low, but at least it's rising. So be careful, because of course one day all correlations will be one. I'm not calling for that day to come soon, but we all know what happens then when that day comes. So yeah, correlations are rising. The easiest way for me to explain why it's important and useful is basically you can use it as a filter between stock pickers market and just a trend followers market. So low correlation, and we're still in a low correlation, means stock pickers market, because you still have a lot of opportunities to outperform by simply picking stocks instead of riding the entire basket. So yeah, this is, and dollar correlations, obviously, of course, negative. Energy is still very negative. This is a 10-day correlation. So from the S&P sectors, of course, XLE has a lot of red, so no surprise here. Stock bond correlations pretty strong. SPY TLT at 0.44 in a 10-day horizon. Gold, interestingly, is finally switched to negative on a short-term basis, and it's quite weak on a 21-day basis. But yeah, what is very interesting that gold has a negative correlation on 10-day basis and is still weak positive correlation on a 21 basis. So we will monitor what is going on that front. That gold bounce was quite expected, but at the same time I missed it because I wanted to touch gold to take out targets lower, especially very important levels closer to 3,500 and 3,800. But hey, it is what it is. Above 41, 39, we had plenty of levels to take some profits. So I hope you did, and I hope you are monitoring your spreadsheets. So yeah, these are the changes in correlation, and if we are looking at the broader picture, so 3 months for a 63-day, you will see absolutely different scenarios. Of course, SPY gold is still very strong correlation. SPY TLT positive strong correlations, no changes in energy and dollar. Of course, yeah, you always need to monitor dollar. And in this regime, you also need to monitor what the commodities and energy are doing. Okay, risk spreads are still signaling that the picture that we have not seen since like 20 years ago. But yeah, risk spreads, which is stock bond spreads, are at all-time high. Looks like everyone is still selling their treasuries and bidding stocks, even in cases where stocks had quite a difficult period. So I'm talking about July. Of course, bonds also had a difficult period, no surprise. So that's why these risk spreads are still moving higher. And if we are looking at taking a look at a longer perspective, which this is just crazy. For me, one of the risk on, risk off signals, and one of the things that would warn me that trouble is ahead is, of course, if this spread would break. So for now, they are not breaking; they are making all-time highs, and everything looks All right. So I expect some dip. We will talk, of course, about stocks right now. We can go and get rid of these correlations. So uh, if we are if we are talking about futures and if we are talking about SPX cash, doesn't matter. Since our last show, it made new highs, new all-time highs, and market is on the way. We have, if you check your spreadsheets, you will see ES target close to 8,000 for this cycle, 79.60, 79.70, something like that. It's in the spreadsheet, and you will see that for targets, when it comes to targets, we have annual targets, of course, that are for futures it's 80.75. For cash it's for cash it's closer to 8,000, and it doesn't change. We don't change our targets based on anything in the middle of a period. These targets were issued and provided on January 2nd. So yeah, so for cash, cash is going to 8,000. So we see that for this month, it's already above both monthly targets. So even bull case for the month of August is already reached. So now if we calculate measured moves like I showed in one of the trading plan videos, you will see that the next ladders are actually very, very close to 8,000. Raphael mentioned very important thing that NQ is still underperforming. If you check your spreadsheets, you will see 30,260 as a flattened zone. So today NQ was tried to break above, but closed below. So we will see what happens tomorrow. Of course, it would be great to see NQ join the party and reclaim this and become bullish for the cycle. But NQ annual target is much closer compared to S&P, and even before this rotation, even before this sell-off, it's strange to call it sell-off, but let's call it how it was before this sell-off that happened in July. NQ was pretty close to its annual target, not there yet, but pretty close. So if we see a NQ trading above 30,260 in the mid-term, maybe even in August or September, we can easily see NQ reaching annual target, and then I would expect ES to follow. But for now, if we are just if we check the spread, so let's say it will be easier to do it with VDFs. But if we just look at SPY QQQ when this reversal happened, yeah. So approximately in the beginning of August, we finally saw this. That NQ started to outperform, but in the broad picture, still you see that, of course, this chart is not looking very good. Basically, if we see new lows in this chart, it will mean that NQ starts to outperform a lot, and of course NQ then will reach all of its targets for the cycle, for the year, and all our targets. But for now we don't see it. So actionable ideas and actionable trades would be this. Watch where indices are trading, and if you are long, make sure you take some profits at levels. I absolutely believe that we will see SPX 8,000, even if it's in December, doesn't matter. But I mean, this year I expect it to happen quite fast. But this year we will see SPX 8,000 or ES 8070, something like that. But now first, major macro zone is 79.60. So overall bullish, check the ranges. You'll see that we still have some upside, but just the fact that we reached monthly targets, that we are trading in a way that we are trading based on our zones and targets. I expect that we can see a couple of red days soon. I'm not expecting something crazy, but I believe we will still be able to buy more a little bit cheaper. If not, hey, whatever, it is a great rally. Don't touch bonds. Now, where to buy gold? And of course, I'm always interested. And if you open your spreadsheets, you will see that, of course, we are a lot higher compared to our flattened zones in gold. Now at 4,400, basically gold is trying to reach 4580, but on a dip now, if I see a dip, I would be happy to buy gold at below 4,300, so 4,250. Overall, gold is now going to a new all-time high, but this one is a bit different because it's going to a new all-time high in a long term, so it can be next year or even later. But it's a sure thing. Now, where I would buy it is somewhere 4250. I would buy the dip. If I'm riding, of course, just use targets and the spreadsheet to take some off and add above. Bitcoin, I absolutely agree with Raphael. Don't touch that thing, at least for now. You will see that basically that thing went nowhere for months, and I still have no clue to which direction it wants to break. When we have a clearer picture, we will see that. Other than that, don't be crazy, don't oversize, and don't take leverage. But I think that we are still on the way to the targets and the new highs in stocks before we see something more serious, some serious crash. I think crash can only happen when all these targets are taken out. Other than that, yeah, I hope you enjoyed your summer, and this is all what I wanted to say.
Yes, there is a question regarding cap. So cap is when the range, normal range, matches the long-term range. So they don't need to be exactly the same. They could be a little spread, but if they are in the same vicinity, in the same area, that's what we qualify as a cap. A cap means what? It means the asset has a very good chance of at least stopping his fall or stopping his move up to consolidate and then continue the move, or to reverse. So that's a way to interpret a cap. It means on the on the short term and on the long term, the risk is capped.
Yeah, and I believe there is a mark on the website if an asset
Yeah,
has a cap, it says.
I prepared. I will show you just quickly, so this way you guys can see. So what we did was we added a small mark. So your assets are here, and green means there's a cap to the downside, and red there's a cap to the upside. Okay, so again, you need to think about it in terms of risk. Let's see if there is another question. Is that on the monthly targets? So by that you mean
if you're talking about these spreadsheets, spreadsheet is for futures. No, it's not monthly targets, but if you are talking about targets, we have annual, quarterly, and monthly, and all these spreadsheets are, of course, in the trading plan section. So.
yeah,
8,000, yeah, 8,000 is basically it matches with a lot of things. 8,000 now is Annual target at the same time, close to 8,000 is our macro zone for this cycle from the spreadsheet. Yeah, so basically we have a lot of matching numbers that are signaling 8,000, but it was annual target issued on January 2nd.
Yeah, I also want to point out I did two videos about how to create your AI agent, and I showed in the last one how to actually use the data from Vi. So the Excel, you just take them, you explain what they are and how to display, and you can get your own chart where you actually follow the stocks you are interested in, the futures ticker you are interested in, and you will see visually, like I showed you for mine, where the flattened zones are, where the macro levels are, the also for yearly, quarterly, monthly targets and pivots where they are. So I mean, it's pretty easy to use. I think there are no more questions.
Yeah, so actually, it's really sad because I'm sure Ted had a lot of important things to say about what's happening, and I was very curious to hear that. So hopefully, we will have Ted on the next show. Hope everything is fine.
That's the last question, right? Sorry.
Yeah.
That's another question. So yeah, you are confusing actually. He's asking if cap is when trade and trend match. No, you are confusing two things. Trend is the direction. Trade and trend are direction of an asset. Range, they are the risk you're taking when you are taking a position. So caps, they happen on ranges. They don't. There is no cap in trade and trend. There is a cap in range. And as those videos on creating that on MFR, they are on our. So first of all, on our YouTube channel, you can see those videos about the AI. If you have the edit plan in your subscription, you will find the levels provided by Vi in the trading plan section, videos also by Vi in the trading plan sections explaining everything. And we also have an AI on directly plugged on our website to which you can ask any question. You can tell him, explain to me what range are, explain to me what trend is, explain to me how I should use both to consider an asset, and the AI is using the data from the website to explain to you all those questions. So it avoids if you don't want to go through the FAQ or to review basically the basis because those are I would guess the basis questions you're asking. The AI has all the information to reply to those questions. What is a cap? It's in the AI. You can ask that to the AI, for instance.
Yeah, so all videos except from the trading plan are public. They are available to everyone here on our YouTube channel, and links to hidden videos are on the trading plan section. Yeah, so again, I don't know, at least I don't see any other questions.
No, we're good.
Yeah, so again, greetings to Ted. I hope everything is fine. Thanks everyone for joining. Enjoy the rest of the summer. And see you hopefully in 2 weeks. And I'm sure we will get some volatility soon, but at the same time, I expect that we will get some green days as well to enjoy. So, bye everyone. Thanks, Rafael. See you.
Thank you, Vi. See you guys in 2 weeks. Bye bye.